From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets on the 8th of May. Hard to believe already.
I know, isn't it just? And of course, Kyle Rodder with Nadine Blaney, and it's been a pretty positive start to the week. It's hard to tell a story around it, I think, after that data on Friday night out of the United States. But hey, good news is good news, it would seem, in this situation. Maybe we'll take a look at where the CBO 200 closed.
Yeah, good news is good news because you're referring to the US jobs data, which, you know, when I first heard that number come through, I was thinking, oh no, this is going to be bad because the Fed's going to have to keep hiking such strong data. But then, you know, reality, well, that also means that there could potentially be, you know, a soft landing of sorts in the United States. And that seemed to be what was being endorsed by at least a couple of the Fed speakers that will be coming out all through this week. But whatever, we did get away from it. And what it meant was, you know, a really positive session here, close to a percentage point higher for the CBO Australia Index. And that was, I mean, last I checked, Kyle, that was even as we see E-minis in the States, you know, turning a bit negative through this session. Slipping
a bit, and yeah, I mean, I suppose we are still climbing a wall of worry because, you know, we're still talking about financial stability risk in the United States, and earnings season isn't over yet. But nevertheless, we look at today, really strong session, and I know we'll get to it in a little bit, but that Westpac news too was treated, you know, positively overall, so the financials were pretty strong, and that always helps.
That's some of our themes. So we've got the banks as one of the major themes because we still do have Commonwealth Bank reporting its quarterly tomorrow. But we also have, of course, the budget tomorrow, counting down to that. And lithium was a bit of a theme. So we'll carry that theme on as we move through the COB. But yes. Energy was the best performing sector today. And that's despite some of the budget measures that are looking to, I suppose, try to recoup some more significant taxpayer dollars from some of these big energy players that are that are feeding the global system.
Yeah, definitely. And well, again, it's that relief rally, I suppose you could say, in some of those cyclical areas of the market that are helping our local energy players out, despite perhaps some of those fiscal headwinds the area or the sector could potentially face. But I guess it's conveyed too in the miners today, and also looking reasonably positive. In fact,
really positive. Is that right? No, that can't be right.
If that's right, then
hang on a second.
I'm thinking that the ASX has probably just hit a record high, and we can all go home for the year. So we might.
No, okay. Look, that's not right. Yeah, because we've got BHP up by 1.7%. So good, but not that good. Take it off the screen. We've got Fortescue.
Off we go. Not that one.
Yeah, we've got Fortescue up by 2%. But yeah, the gold miners lower today. I think I'm getting the giggles. And as far as the miners go, Lynas was in focus today because it was actually the best performer pretty much all through the day on the 200, up by 12% by the end of it all because it had that extension to its license to operate essentially in Malaysia until January of 2024.
Okay, so huge. That's a massive development there, and well, I suppose it also plays into, again, like you said before, that lithium story, which we'll dig into as well. And I mean, I've been spending a lot of the weekend watching the boxing, actually, and I can imagine Goldman Sachs in the one corner, Morgan Stanley in another. Goldman constantly trying to talk down the space. Morgan Stanley says, no, hang on a second, we're going to punch back. And a broken note basically out today on a couple of names, and you can see the strength in the sector there, rebounding after, what was some weakness last week.
Yeah, Morgan Stanley was out with a note saying that basically supply-demand dynamics are moving in favor of the price. You know, we know that prices have been bouncing, but it says that sentiment is improving, inventory's down. It's saying that supply growth has not come through to the same extent as we had potentially been expecting. So that really did, light a fire underneath a lot of those lithium shares here today. And in fact, I was on the call today. It was fun. Nathan Simison-Down from Deep Data Analytics. And we also had Philip Pepe from Shaw Partners. So I said to them, I wasn't very prescriptive with the stock of the day. I said, okay, if lithium's the story, if lithium is what we're going with, is there a company that you would be buying in this space? Here's what they had to say.
So in that context, I wouldn't be putting a lot in it. It's a trade, not an investment. And I would put a small amount and see how that plays out. And it's the ones that are loss makers that's going to come into play because they've been beaten up the most. So you've got your CXO, GL1 that we were going to talk about. All of these ones are starting to move and they've been beaten up the most. So your risk return is much higher there, but of course the risk is also high. So put in a little bit, see how it goes. That's how I'd approach it. I'm not looking at lithium sector at the moment as an investment play. Just to give the bigger picture play, BHP turned it down, and in the last month, Rio turned it down too. So that tells you the longer term dynamics. The big boys don't see the supply demand working for them. But look, the market loves the turnaround story, and lithium is going to get a lot of love in the short term.
So in a diversified portfolio at current levels, it is worth having a look at the space. It could turn as quickly, it could fall as quickly as it's risen, but as you said, I don't think, I think it was Morgan Stanley, they won't be the only broker pounding the table in the next 2 weeks. It will get some traction, so now's probably as good a time as any to be looking at the lithium space.
So Kyle, they did both give me a buy in the lithium space, but it was a very begrudging sort of conversation. Really? Both of them were saying, look, we wouldn't be rushing into lithium right now. Really? You know, Nathan was saying that's a trading idea with global lithium. Philip saying, yeah, you have to be very nimble. You know, you do want to capture some of the upside, but yeah, it wasn't like, yes, we love lithium. Let's go buy some lithium. You know who does love lithium? Take a wild guess.
Kurt Cobain.
Yes. A guy that we know and love that hangs around here quite a bit. Henry Jennings.
From who also plays in a great rock band.
He does too. As well. Yeah, he does. So anyways, he joined me on the small caps. Yep. And yeah, I had to pick up the lithium theme with him. So here's what he had to say.
Pilbara Minerals is certainly one that I've been following and have suggested on this program that it looks very, very interesting. Of course, it's no longer a small cap by any stretch of the imagination. You know, Liontown, that bid there really sort of changed, I think, the dynamics in the industry. Also, of course, that move by Chile with the nationalisation going forward, or potential national participation in lithium, also changes things as well, because it does stop or hinder investment in the country. One company that I'm looking at, which again has done a recent capital raise, is a stock called Latin Resources, which has a project in Brazil. Salinas is the project there. They've got a mineral resource estimate coming out in June, and it's May, so we're not far away from that. That will be a catalyst for a further push higher. They recently raised some money, $37 million at 10.5 cents. It's currently trading around 13.5, 14 cents. So that one looks pretty interesting. There are some catalysts to come, and they are funded to progress that DFS, the definitive feasibility study at Salinas. And of course, they're in Brazil rather than Chile, which is good news for them. So yes, do like Latin Resources at the moment, that's for sure.
All right, Latin Resources may be a buying opportunity today because it is down by 3.7%. There was a change in substantial holding there. But yeah, so there's one of the major themes from the day, which was lithium.
Yes, indeed. And well, let's get to that other theme, because we flagged it before, which is Westpac and the banks. Posting a really solid set of numbers. Now, it's hard to always get a little bit of a read, I guess, on why the share price rally. Because it got beaten up last week after NAB's results. The whole sector did. But seemed to be reasonably positive. And most of the analysts that we spoke to today suggested that, you know, maybe there's some life in the old dog yet. Yeah,
so I saw a tweet by David Berthen-Jones, who's joined us on the program before. I keep meaning to give him a call to get him on again, but he was saying basically, you know, expectations were high for CBA and NAB, and so of course they disappointed. It's all about expectations. Those expectations were reworked, I suppose, for ANZ and Westpac, lower. And so they seem to have been beaten. But it was also interesting because Westpac has been under this big cost out program. And so it's sort of, obviously it's tooting its own horn, saying that it's, I think, taken $1 billion out of costs since 2020. But it says from here, it's not going to be focusing on, you know, that dollar figure. It's rather going to try to improve the expense to income ratio relative to its peers, rather than targeting that explicit figure. But look, positive session, up by 2%. You know what I noticed today was that Macquarie was down by about 2% at one stage. Yeah, closed down by 1.8%. So interesting, because of course the brokers have come in on Macquarie, and on the day that it reported, everybody's saying, can't put a foot wrong. I clearly remember Junbei Liu from Tribeca telling me that on the call, and Adam Dawes from Shaw and Partner was saying, yeah, I buy it anytime. I would buy it if it was under 180. Well, look at that. It's sitting at 173.56. So, that's well, according to some, that's a pretty good price to get into Macquarie Group.
Yeah, and I'm just seeing here, Citi has reduced its target price from 190 to 175. So now trading at a little bit of a premium to that, just in particular. But yeah, I mean, sometimes the devil is in the detail. I think ResMed was a great example last week, right, of a company that, the results were reacted to in a kind of a mixed fashion, but over the coming days with
gathered a lot of momentum.
It gathered a lot of momentum, and again, it sort of changed the story there. So maybe we're seeing that a little bit with Macquarie, with some of these broker downgrades now that, I guess the dust has settled a little bit.
Yeah, and markets are going to be volatile, and the commodities business has been going so strong. I would note just on Citi, they did say that ANZ is the pick of the bunch for the banks for them. Well, sort of a segue into the economic data of today, and that was, of course, the NAB business survey. It was out, and you can see, all things considered, pretty strong responses coming from Australian business, particularly when you consider that we're in this hiking environment. We've got so much concern about demand in the broader economy. But if you look at the NAB business survey, I think confidence and conditions actually, I know that confidence rose slightly, so picking itself up from negativity in the previous month.
Yeah, and trading conditions were lower, but still up 20 index points. So it makes it... The question remains, doesn't it? What's going to follow what in terms of, business still seems to be very, very confident, but consumers are obviously absolutely in the doldrums. And I was having a chat with my father, who's a small business person, over the weekend. 60th birthday today. Happy birthday, Dad.
Happy birthday, Mr.
Doing
Rada.
budgets, doing budgets going into the new year and saying, we're going to put on heads, and we're pretty optimistic, on the outlook there, in terms of business going forward. We can see that things might slow down a little bit, but we're still feeling pretty good. So, I mean, only one person, but the closest person I have to a pulse on I guess, business sentiment, if you will, and there seems to be sort of persistent.
Do you mind me asking what sector that would be in?
Marketing.
Oh.
Marketing. And I said to him, and this is what I was worried about my father, of course, because he still has kids to feed. But I said,
not you,
not me. A couple of younger ones. So although he fed me very nicely over the weekend, but he sort of said, no one seems to be pulling back on their marketing spend yet. Okay. I said, listen, just take into consideration a downside scenario, maybe game that out a little bit, but. Again, forecasting budgets for the next 12 months, businesses that he's talking to, a couple of ASX companies as well, aren't going to cut back on their marketing spend, at least yet. That's what he's been told.
Yeah, all right, that's really interesting, and it's the anecdotal evidence sometimes that is the most interesting of all, though. Business does still say that cost pressures are a big concern, a big challenge, and that's one thing I even picked up in the quarterlies coming from the miners over the past couple of weeks, is that you would have thought that a lot of that, those headwinds in terms of costs would have eased, but not so. According to a lot of businesses. So the measure of costs steadied at a quarterly rate of 1.9%, purchasing costs picking up by 2.3% in this NAB business survey. And tomorrow we get the monthly consumer confidence read from Westpac as well. So, it's really interesting. Now, what else are we getting tomorrow? It's this thing. It happens every year.
Yeah, it's the other half of economic management that's not the RBA.
It's fiscal policy.
Fiscal policy, the other hand that we talk about sometimes.
So we're talking about the $14.6 billion cost of living relief package for 4 years. And of course, the next question is, isn't this inflationary?
Yeah, well, I don't want to sort of shoehorn my view in there today, but my view today was sort of providing some commendation, or my compliments to the government for moving away from this focus on budget surpluses. But one thing's really irked me the last couple of days is this whole notion that this cost of release program will actually bring down inflationary pressures because there'll be lower energy bills and things of that nature. A lot of economists that I'm listening to are saying, BS, this is politics, basically.
Yeah, because people will spend that money elsewhere.
That's the argument, right? So,
look, I'm not saying that there's no room to increase some payments, particularly for those that are really suffering. Because we know that inflation disproportionately hurts those who have the least. But it's the sales pitch that sort of gets you.
don't treat us like idiots.
Although Jim Chalmers, he's been quite blunt, I think, in talking about the challenges facing the economy, both here at home and globally as well, saying that we're in for a pretty patchy period, to say the least, period of extremely slow growth, I think is what he was saying. So look, not long to wait now. I don't think we're going to get any big blockbusters that are a big surprise in this budget, but we're talking about the resource rent taxes, and we'll be talking about potential surplus and everything else. So that 7:30 is when the budget speech is tomorrow night, and then we will be having full coverage, obviously, looking at it from all different angles, what sectors may benefit, may not, may be burdened, and we'll start by doing that 9:30 a.m. Wednesday morning, so budget day after. Can we call it? Yeah. Today's budget eve, got the budget. We'll do our budget breakfast after that.
All right, let's do the leaders and laggards now. And well, we do expect there'll be a few lithium names up the top. In fact, it's almost exclusively lithium names, and plus Lynas, so a very rare earths, very future-looking, perhaps you could say, leaderboard there when it comes to the rare earths and the EV thematic. But up 12%. You spoke about Lynas before, and well, Life 360 is another one there on the screen, which isn't related to that. Any news there?
Yeah, well, it's because we're getting the brokers weighing in ahead of its first quarter update, which I believe comes on the 15th, so that's just next week. We've got Bell Potter saying that it should show a return to growth for one of its key metrics. So yeah, we're looking at growth in paying circles, or customers essentially. Average revenue, Bell Potter says, should be up at about 12%. And also says that if Life 360's cash flow and adjusted earnings turn positive ahead of the schedule, which it has already put at April, that you could see a real, real positivity. So if we've seen this, all of these tech companies have had to set these goals. The markets wanted to know when, like the timeline for getting towards cash flow and earnings positivity. If it's done so in April, then we'll likely see a big jump in its share price. And today responded accordingly, up by about 8%.
Have you ever used the app as well? You've got young kids, of course.
No, I haven't. One of my daughters has a Space Talk watch, and the technology is great, and I have no complaints. Problem being, it's been so big on her arm, she has always found it really difficult to wear. So she's actually never really gotten into it. So
like an ankle bracelet.
Yeah, it's a homing mechanism. Yeah, totally.
Prisoner release program.
So no, she's never really worn it, and that's just my little anecdote on that Space Talk technology. But no, Life 360. Maybe when they're teenagers, it'll be more tempting. But yeah.
Perhaps so. Okay,
they're pretty close to me now.
Yeah, not far off. It'll come around. Laggards, of course. Let's have a look there. And Sierra Resources just goes from bad to worse. It has to be said for its share price. I mean, I'd try and check actually how far it's actually fallen since its results, but I feel I was on on this very show about a week and a half ago after it reported its quarterly production update, and I think the share price was above $1.30 then. So we're looking at more than a 30% raw down in that company. So really weak, and you've got something there too. Yeah,
well, it's interesting to note, Shawn Partners has a buy rating on the stock, just initiated coverage with a buy rating. Share price target $1.40, so quite a lot of blue sky from there. Yeah, that's interesting. Maybe we'll ask the guys at Shawn Partners about that one next time we speak.
Well, tomorrow perhaps, because we'll have Martin Crab.
Yeah, we will. Yeah, we will on this very program.
We'll write it down on the desk today.
The gold miners suffered today. Risk on.
And
no big surprise.
Off, yes. Still obviously one of the best performers for the year in terms of the ASX 200 or ASX All Ordinaries Gold Index. Take a little bit of a look at that quickly, if I may. Just give me 2 secs. Remains up by 30% for the year, but there you go. A little bit of a pullback in the gold space today with risk on.
So that's the small to mid cap space. Look, don't know a lot of the stories behind this, but those are pretty chunky gains. And then we've got MedAdvisor. So it was out with its quarterly week before last. It had some good solid gains last week, so it just looks like it's giving some of that back up.
Indeed. And, I suppose it will be just counting down to that budget tomorrow. I haven't actually had a look at the US corporate calendar or too much of that, but it's kind of starting to peter off a little bit. I think Walt Disney's the one that's caught my eye this week, mostly just the streaming wars and everything like that, as well as the amusement park discretionary
we had
spend.
that like reopening sort of thematic going on with Disney as well.
Yeah, it was just a big company in general, but actually a couple of bank holidays in Europe too.
UK?
To note. UK, of course.
Big holiday there over the weekend. Oh my goodness!
Yes.
What pomp! Did you see that carriage, the golden carriage?
I think it was King George's or something like that.
Oh my God.
Yeah,
There was one carriage that was built in Australia, they said, in 2012. I can never figure out which one it is, but it was like a Disney movie on steroids, watching all of those carriages come for the coronation. I'm not overly familiar with this, but the Centix Investor Confidence Survey coming out in the Eurozone, industrial production in Germany is expected to have waned, I do believe, in the month of March.
Yes, and then as we said before, Westpac Consumer Sentiment Survey and retail sales will also be out tomorrow too, which will be interesting, but it's no bigger than that federal budget release. And well, I mean, things will be coloured, of course, too, by that CBA quarterly. We won't get all the information we need by the bank, but enough, you would think, to tell us what we need to know about where the share price ought to be heading.
It'll sort of round out the story coming from the bank, so thank you, CBA, for releasing that, but it gives us something to compare and contrast. And of course, all of these big bankers have said that the times they are going to get tougher in terms of NIM. Still very, very strong competition in the mortgage space. So I'll be talking to, likely Alex Pakoulis. He'll be joining from Harper's Bernays tomorrow. We'll be speaking with Chris Weston at Pepperstone to take a pulse check of what happens on overnight markets. Look, David Lane from Ords is always good for a few stock picks or stock recommendations, we should say. So it'll be a good day tomorrow, and of course all leading up to the budget.
Yeah, exactly. So we'll get a preview on that. And we also have another virtual event that we have coming up.
I'm pretty excited about this one. This is only the second time we've said this publicly, but we are hosting an investor event in partnership with the team at Market Matters. And it's all about FY24. Are you ready for it? I don't know. I feel like I'd like to be, so to do so, I will be registering. And when you register, it means you can watch live, and that's on the 18th of May at 11:30, or you can catch up with it when you like. So these are some of our favorites. I don't want to. They're some of our regular money managers talking high conviction calls. And of course, who knows what this financial year will bring. It's potentially going to be really volatile.
Absolutely. So you can go to ausbiz.co/ready to register, and you can catch up on that after the event. So if you can't make it at 11:30 a.m. on the 18th of May, when that will go live with our favourite / frequent / whatever you would like to.
I just feel bad saying favourite, because I genuinely I think we're so blessed in the experts that we have come to see us on Ausbiz. So I do hope you enjoy them as well. Okay, so market finished higher significantly, putting on, close to 0.9%. We're watching the sterling right now sitting at 11-month highs, the Aussie dollar up 0.5% to a 3-week high. I continually am having these conversations about how the Aussie dollar just looks like it might be able to break out of the range it's been stuck in. And Patrick Edquivel from eBay, saying it's exciting to trade the Aussie these days. So we'll be keeping our eye on all of that through the overnight.
Absolutely, and we'll pick things up tomorrow morning, but you can catch up on all the views and interviews today on the website. And what do you reckon, Dean? Call it for another day?
We will call it for another day. We look forward to seeing you tomorrow.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.